Hello guys, it's Fred here from Pro Tennis Trader. I hope you're well. In this video, we're going to be taking a look at overreaction in the markets and how we can profit from this in tennis trading. Now, overreaction occurs in all sports markets as well, of course, in the financial markets. Overreaction in the financial markets can be defined as an extreme emotional response to new information. Now, in finance and investing, it is an emotional response to a security, such as a stock or other investment, which is led by either greed or fear. Now, investors overreacting to news cause the security to become either overbought or oversold until it returns to its intrinsic value. So situations where this might occur would be announcements such as interest rate announcements, GDP figures, and of course unexpected events such as natural disasters. And this year we saw this in the price of the ruble that yo-yoed when the invasion of Ukraine occurred. Now it shot up to 135 rubles to the dollar, and you can see the volume of trades that were entered when the invasion took place, and then it yo-yoed back to 52 and is currently sat at 60 as the ruble strengthened again. Now this was an extreme example of price overreaction, but demonstrates this point perfectly. It is an unexpected price movement which will often rebound back when normality is restored or further information or considerations are met. And in the sports markets, overreaction in price is driven by the same thing, an extreme emotional response to new information. And in the sports markets, the pricing is driven by supply and demand for bets on different outcomes of an event. For example, a high volume of back bets will cause the price on the exchange for a back bet to shorten, and therefore for the other corresponding bets to drift accordingly. Now, in tennis match betting or trading, as there are only two outcomes, if one player's price shortens, then this has the proportionate seesaw effect where the opponent's price will rise proportionately. So let's be clear on this. If there is a surge in back bets on, let's say, player A, this will cause the price to shorten further than expected, reducing the odds of this player and increasing the odds of his opponent, player B. So let's say player A is priced at 1.95 and player B is priced at 2.05. Now there's a sniff of an early break from player A as he went 15-40 and had 2 break points. Now this caused an unusual emotional response, i.e. overreaction in the market, and so his price shortened to 1.50. Now the price of player B drifted to 3.0. Now this was caused as there was a surge in the market for back bets on player A, causing the price to rapidly shorten. This is overreaction in the market. If player A then lost his 2 breakpoints and player B went on to hold, then of course this overreacted price of 1.5 will return to 1.95 and player B's price to return to 2.05. This is the mechanical nature of tennis betting pricing. So what does overreaction give us? Well, it gives us value. Now value refers to the situation where you are getting better than true odds on a player. So let's say the favourite drops the first set. I'll use the example of Carlos Alcaraz in the semi-final of the US Open 2022. Now his starting price before the match began was 1.6. When he dropped the first set, his price rose to 2.4. Now this is actually quite a conservative example of overreaction in price due to the strength of TFO in this match, and is what I like to refer to as expected overreaction in price. And this overreaction is providing us with value. Now if you backed him at the start with a price of 1.6, this is not value. If you backed him at the price of 2.4 at the end of the first set, this of course represents value. Of course he is a set down, but he is the favourite in a potential 5-set Grand Slam match. Now with the potential of the match going into 5 sets, this was value at the price of 2.4, but actually probability was still favourable, and we had a potential 5 sets for Alcaraz to make his comeback, which of course he did. Now I'm not a gambler, so I will not just purely place a back bet on Alcaraz at this price. I'm a trader, and so of course I will use this value to my advantage by trading the favourite who has dropped the first set. However, even for gamblers out there, you should always be on the lookout for value from overreaction in the market. Now when Alcaraz won the second set, his price returned back to the starting price of 1.6 from the overreacted price of 2.4, where we got the value. Now this is an example of expected overreaction in the market. We expect there to be overreaction because the favourite has dropped the first set. This is a mechanical process that is played out time and time again when the favourite loses the first set. But there is a type of overreaction that I like to call unexpected overreaction, and this is something that we can use to frequently get ahead of the markets and profit from. Now there are numerous situations where this occurs in different sports and particularly in tennis. Of course, I'm not going to expose all of these occurrences as this would be unfair to my paying members. However, I'm going to demonstrate one of these which you can use in your trading, or indeed if you're a bettor, then this can also be applied. Now I'm going to refer back to the US Open semi-final between Alcaraz and Tiafoe. Now without going into the complexities of my trade in this second set, I was essentially waiting on Alcaraz to close out the second set, having dropped the first set. I'd already locked in profit early on in the set. However, if Alcaraz could win the set, then this would further boost my profits. Now Alcaraz was a break-up at 5-2 in this second set, with his opponent Tiafoe about to serve. Now in Tiafoe's service game, the score went to 15-40, with Alcaraz having 2 break points. Now, as you can see on the Betfair charts, his price shortened from 1.8 to 1.55. Now Alcaraz started the match at the price of 1.6, so we'd expect 1.6 to be the second set winning price from Alcaraz. So the price of 1.55 was even better than this expected set end price, and he hadn't even broken Tiafoe or won the set. There was essentially overreaction in the market. Now if you were waiting like me for Alcaraz to win this second set, then this overreaction in the market, despite not winning the second set or even breaking Tiafoe in this service game, provided better prices than we would expect and would provide the ideal time to exit the market. Now Alcaraz did not convert these breakpoints and Tiafoe held. Then the following game, where Alcaraz had to hold serve to win the set, it went to deuce and he could very well have been broken. And you would have completely missed the opportunity to profit from the prices we had at 15-40 in the previous game. Now there are 2 major benefits to this method of capitalising on an overreaction in the market. Firstly, you're getting a better price than the set end price. In this scenario, the set end price when Alcaraz held was 1.6. Now had you got out at 15.40, you'd have got a price of 1.55. Now this price difference is not that dramatic, and very often this spread will be much larger, where you can make up to 20 ticks difference. But secondly, you'll see that Alcaraz went to deuce in the last game of the second set. By capitalising on overreaction, you are avoiding a situation where you essentially have money on the table and then it being lost due to holding on in the trade too long, and the player you need to hold serve being broken. And of course, as well as the tennis markets, overreaction also occurs at numerous times in other sports and provides opportunities to take advantage of the situation and profit from it. With football, you'll often get overreaction in the market where there has just been a penalty awarded, a free kick close to the box, an injury, and of course a sending off, among a number of other scenarios. Now with football, you also get overreaction when a goal has been scored. The team who has just scored will see their price shorten dramatically and then reasonably quickly start drifting again if no other pivotal event occurs shortly after. You'll often see this in golf as well. For example, if the leader or close to the leader hits their ball into the rough or misses an easy putt. You'll often see a large overreaction in price before the prices bounce back. However, the major difference between other sports markets and even the financial markets is that the price movements are not as mechanical as the tennis markets. Now I've showed you just how mechanical and predictable these price movements are in tennis in the Alcaraz-Tiafoe match, and of course this is what makes the tennis markets so good to trade. I hope you found this video useful. For loads more tennis trading related videos, please visit my channel and subscribe to be notified when I add new videos. And if you'd like to become a pro tennis trader, then simply visit protennistrader.com, where you can enroll on my free Introduction into Tennis Trading video course to see what it's all about. And for a limited time only, you can also receive a copy of my ebook, Tennis Trading: The Ultimate Guide to Getting Started. I'll see you again soon.